Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Let's see, do we have everything set up here? Oh, I see what we have to do. Just bring in Chicago Quant. That's what it is. Right there. There we go. And turn that up right there. Minimize that like so. Put that up over here. There we go. Here's the euro right off the bat this morning. Let's put the dollar index up there and see what they're doing with that. Where are you, dollar index? Right there. There's the dollar index. You can see, I guess if it's not all-time highs, it's very close to being all-time highs. That's pretty much the name of the game at this point. You can see, we can go back to euro just for a quick flash, and then we'll talk about the dollar a little bit more here. But you can see the euro making new, I guess that is all-time lows. I guess that's the best way to describe that. So, you know, it's all has to do with the world marketplace at this point. And the Federal Reserve influencing the world marketplace. That's what it comes down to. And we're raising rates, and as I always make that very poor joke, in America we believe on buying low and selling high, and a lot of the rest of the world has been, especially Europe in particular, has been doing the buy low, sell lower. Now everybody's joining in with the idea that you try to actually pay some interest on the money you borrowed. That's a nice thing, and that should stop governments from borrowing a little bit. Let's say. Now let's jump over to the chat line. Let's see. Double click there. And the chat line is popping up, it looks like, after this commercial from YouTube. And I will take a sip of my tea. As it spins away. Spinning away. Let's try it again. It's trying to load. It'll load in a few seconds, and we'll be able to see if anybody's saying hi. Good morning, good afternoon, and good evening to me. And that is usually the name of the game. Nothing yet. I don't understand that, but we'll see. Well, you can at least see the screen. I know that much. I can't see if you're asking a question. Whoop! I heard something. Where did I hear it? Maybe it's... Let's try this again. I'm going to close that. Open that back up again. And double click on that. I'm not sure what's going on there, but having a little tough time with getting the Dukascopy up. But I do see it up on my screen, so that's good, but I would like to see it up on the YouTube. Copy link, open link, a new tab. Let's do that. Oh, let's see if it'll load it then. Looks like it's trying to get there. Let me just double check a few other things just to make sure it's working. Yeah, it's all working there. Okay, so it's just YouTube's being, every so often YouTube has its issues, So I would hope to see everybody's up there, but I can't tell one way or the other. Let me check my Skype. I don't see any messages coming in through the Skype, so that means life is okay there. Let me just double check my Facebook. Right there. Nothing there. So all good. I hear another ding. Where are these dings coming from? I hear ding somewhere. Is it over here? Not there. Someone's dinging me and I don't hear it. I mean, I don't see it. I'm not sure which computer it's coming in on. Ah, there's Dukascopy. There we are. Now I can see the chat line. And there's Metho. TGIF Metho. TGIF Jordan. Indeed, indeed. Dollar just keeps on marching. I guess it's the best way to describe it. The dollar keeps on marching. Interest rates are rising, and they're going to rise. It looks like to me, like I said yesterday, after Mr. Powell's Wednesday meeting, he made it pretty clear he's putting up another 1.5% up there for sure. So it's pushing us into the fours, which is where it belongs. I mean, with 8.1 or 8.3 inflation, it belongs in the fours and the fives. And so, just having a sip of my tea. What else can we say about that? Let's go over to J4X. You can see here, same thing. Look at this march up with the big green hinky askies. The green line is trying to pierce through. Geez, well, it's the 81 area, but it's looks like it's going to try to push even harder. You know, it's heading for 87. Now there's a high right there. That last rampage, you know. And it got up to like 91, 92. So when that traders ask me, you know, where do you think you can go, Doc? I'll say that 91, 92. You know, just because it done it before. So from there, what else can I say about the dollar index? Let me just go back to that dollar index real quick. Right there. Just look at that. Just pressure galore. The weekly's not complaining. Even the echo, as I like to call it, the blue dashed line, that we don't really, you know, I've talked about it and how it it teaches me things and, you know, gives me heads up in future events. It's interesting there. It's staying above the manifold even. You know, it's not letting go. Now, see where it did it right there? When it finally does break down below the manifold, right, with that action, we start to get the weakness. So we'll see. You know, it tried to do it there. You can see there it came sliding down, came down and hit that. Looked like it was going to tell us it was going to be weak. And what did we do? We got a daily buy and it perked up right there instead. So, no, I'm not convinced that it has much influence when it comes to. I mean, it has great influence. I don't think it's trying to tell us anything, as much as it's touching the bottom end of the. As you can see right here, it's touching it right there. It's touching the bottom end. Let's see. Let's make this bigger for a second, like that. You see it right there. You know, it's right there, banging against it again. Are they going to take another breath and then turn it back up again? Possibly so. When you know that American interest rates are going up higher, money is coming here so that they can buy it low and sell it high. All right, let's get back over to the euro. There's the euro. We'll look at some of the individual pairs here now, and you can see, you know, we've been in that daily sell since like almost the par area, and Smackadoodle City, and on that daily, and that's what we're doing. You can see the daily right here. You know, it went into that daily sell right there, and it just glided down. And let's put it up on J4X and see how it looks. I'm sure the Hinky Ashkies have rolled over, rolling with the homies, you know, heading south just like us. Right there, and it has. Look at it. Look at all that red. All that red, and the green line's been underneath, and it tried to pop up and back underneath again. So that pressure is on, and it's not letting go. The 10-year Treasury is now trading at 3.75, and I saw where the 2-year is trading at 4.20. So, you know, it's, you know, they're adjusting and drifting to that target zone of the 4.5, 5% area, which makes total sense. The longer term bonds are anticipating that, you know, they're going to top out in that area. We'll see. That's where the game starts to look like fun, you know. As we take a sip of our tea, that's where the game starts to look like fun. That's what I like to say. That's where the action starts to say, whoa, you know. They're going to start wondering about this, that, and the other thing. So in other words, let me describe that in cleaner English. What's going to happen is that when we get up into the 4.25, 4.5, and 5 area, they're going to, you know, there's going to be a lot of money managers are going to want to anticipate, okay, this is the top. So then they try to sell it. And then there's others that are going to go, Inflation's still here. We don't see enough change in government policy. And next thing you know, they're trading at 6%. And they talk about the bond vigilantes and the blood on the street, that other thing. And that's, the other stuff that they like to say. And so that's where I'm at. Let's see what happens. A big answer, and I know I say this, it sounds like broken record, but November is going to tell us a lot. If we get a veto-proof majority in the House with the Republicans for the first time since 1871, whereas the Democrats have had veto-proof majorities for the last 100 years, off and on with no problem, knowing that they were going to get it every so often, which means that no matter who's the president of the United States, the House of Representatives and the Speaker does what they want to do and bumps the president altogether. That's where we're going to know. Because if yesterday, I don't know if anybody's picking up the news about it, but yesterday and the day before, they called all the big heads of all the major banks in front of Congress. First, it was the House of Representatives. Then it was the Senate. And so you had Jamie Dimon from J.P. Morgan. You had I'm trying to think of they had Mahoney, is it, from Bank of America. They had like 6, 7. They had Wells Fargo there. They had Citibank there, the woman, I think, that runs Citibank. They had, who else did they have there? Citibank. Trying to think who else there was there. PNC, Mellon, Bank of New York. They had about 7, 8 head chair people there, and they basically, Jamie Dimon was the loudest, but they were all saying it. You got to stop spending government money. You just got to stop spending. Throw this money in. That's what's generating the inflation. Jamie Dimon even said something like, when one of the congresswomen asked about, I don't know, global warming or something like that, and would you stop financing oil businesses to contribute to helping the global warming or global cooling or whatever they talk about, that religion? He said, no, that would be taking America down the road to hell. That's what he said. And she said, well, Chairman, I think that every person that has an account at J.P. Morgan Chase should close it right now. That's what she said. She wanted to run on the banks. So, that's going on. They're starting to, I guess you could say the chairmans of these banks realize Republicans are going to take control, and they're starting to lay the law of the land down. Like, we're not going to be throwing money out the door like we had been, that type of thing. So that's that is the story there. That is the story there. And I'm trying to think what else that was what I got out of it all. I thought it was pretty cool. But that was the story. All right. So now, oh, that's the wrong one. Let's do this. Let's put that back in there and go like that. There we go. So, that's where we stand. And so in November, we'll see. When, I always try to tell you that I'm not doing this for political reasons. I'm telling you, I've never seen anything like this in the 45 years I've been involved in the markets. The markets themselves talk about the election every day. It's like, come on, guys, it's May. Come on, guys, it's March. Come on, guys, it's, now it's June. Come on, guys, stop talking about the election. It's July. It's the summertime. Can't we have some fun? Then August comes around, and that's all they're talking about is the elections. And then in September, here we are, September 23rd, with 7 days left, I think it is, in the month. You just double check, but I think that's what it is. 7 days. It's a 30-day month, right? Yeah, 30-day month. So, they're talking about the elections every day. That's all they do. They won't let it go. So, believe me, I would love not to have to think about elections and interest rate increases. I would just rather have some smooth, steady trading, But no, we got to listen to that all the time. All right. Where do we go from here? Let's take a look at the cable. And there's the cable right there. Same situation. They're banging that puppy down. It's down to 110 and change now. And both of them long weekly sells now. We're going on 6 weeks, heading for 7 with no problem whatsoever. And let's put it up on J4X. Right there. Same situation. Down, down, down she goes. Where she stops, nobody knows. Let's put a monthly in there on J4X and blow it up on the whole screen. I want to see when's the last time we were down this low. I don't think ever. So we're taking out the lows of, what is that? That was February of 2020 during the crash of COVID. And the V bottom that we talked about and was totally right about. Let's see now. Let's go back to the daily. So we're seeing new all-time lows on all these products here. Wonder what they're doing with Swiss. But let's go over to the Swiss and see what they're doing. I saw some spikes in the Swiss over the last couple days. There was a spike yesterday. There it is. And it's just unchanged today. And I'm watching to see if they're going to take out that high of back of June. That's where they made all those wild moves from the June market, And then let's put Swiss up on there. I'll tell you how much politics is involved every day. Just now, they put a picture of Newt Gingrich with the Contract of America in 1994 election. That's all. As House GOP set to reveal their plan to take majority. That's all there is. That's the headline on the Financial Channel. And it's like they don't let go of it. Every day I gotta dance around it. And I'm a political hack. I don't want to hear it. It's enough. Enough. All right. From there we're going to go over to the dollar Turkish lira. See what they're doing with that. You can see there. Another one of those going to all-time highs again. Boy, they're heading for the 1840 and change now. 1841.4 is the high, and yesterday it was 1841.0. So they're marching north. You can see the daily and weekly buy. It's been in a weekly buy over going on 7 months now. Most of February, March, April, May, June, July, August, September. September turns it into the 8th month. Wow. All right. Let's put up the euro Turkish lira over on J4X. Right there. Trading in the basically 18, so 1797. So the dollar, which usually is the other way around, the euro was stronger, against it. And this is I guess it's showing the weakness of the euro itself. Because the last time it crashed, the euro, Turkish lira euro, or euro Turkish lira, back in December of, the end of the year of last year, they took it down from, let me just show it to you again. It was at 21 right there. Is that it? That's the dollar. And it ran it up to 18. Is that right? Euro Turkish lira. Yeah. So it had exploded up to 18. I don't know why it's reflecting the high of 17,948. So that it hit that, and then the next day, this is a daily right there, and then they slammed it down. Now when we go over to the euro Turkish lira here, and we go back and look at the same date, you can see it was up as high that day of 2073. So, from 18 to 27, that's 2.7. That's big. And now we have it the reverse. So we have, you see on J4X, it's trading at 1797, and over on J4X, when we look at let's go back to it. When we go back and look at the dollar, it's trading at right there. It's trading. You can see it right there. Excuse me. It's trading at 1841 as we. Oh, you can't see that too well. Let's do this. 1841, right there. Right there. Matter of fact, why don't we just make that bigger too? Scaling. There we are. And you can see it right there. The high is 1841. It's offered at 1841. It's basically they're playing with the all-time highs right there. You can see it ticking away with a little arrow there and so forth. Offers now 1841.28. Yeah, that's what that is. 28 with a 40.85 bid. So that's something. It's gone contango, and I guess that's the weakness of the euro and the strength of the dollar. I mean, that's what it comes down to. And when you're paying good interest rates on money, you know, that's why they're buying dollars. They want to park their money here and get good interest rates. Which always makes you, think about it a little bit harder than most. And that is, if they're doing it to the dollar, and if as the Chinese always tell you how, oh my God, we need to be the reserve currency. Well, go raise your rates. That's what it comes down to. Raise your rates and pay dividends, and interest. You want to be the world reserve currency? Prove it. Go out there, float, make your currency float, and it might jump to like 15, instead of 7 or 6 or whatever it is, and you might be trading at 17 or 18 like the Turkish Lira, but go pay 20% on your money. You want to be the world reserve currency? Go do it. I don't understand. They think that they can browbeat us. They talk us into it. Hey, world, guess what? We're a better country, economically than America. We're going to overtake them any day now. So invest all your money in our country, and then when something goes bankrupt, we don't pay you any money. That's another problem. Look at Evergreen and a few of these other majors over there. They go bankrupt, and they pay off the people in China, and they don't pay off the foreign investors. And you don't get the national or international media talking about it. I have to find these really obscure articles like, building in Hong Kong under receivership by international conglomerate, international consortium to get money back from China. Things like that. It's really odd. In the United States, we have this media that keeps on telling us how good China is. We have the Speaker of the House. She says that they're a democracy just like America. She says that all the time. It's really crazy. It's like, are all these people on the payroll or something? I mean, are they getting paid to say that? Because we know it's not the truth. So, anyhow, that's that. From there, let's go over and take a look at. Where do we go over and take a look at? Let's take a look at the Canadian dollar. Another one of those that are dancing high. Just like that. Look at that. It's been a daily buy right there. Weekly buy from back here. Those dots need to be moved up. There it is right there. So we've been in the weekly buy since here. Since the 29 area, 28 area, 29 area, and then they challenged it. You can see here, and changed them. They went into a sell here, and then they challenged it and went back into the buy. And it's staying in the buy at this point. And then when we go over and take a look at oil, that's what we do. We'll go throw oil up on. We like to look at oil and Canadian at the same time. Right there. There is oil right there. You can see oil's been just rolling down. We're playing with the 80 area now. And this is going up. That's the way it's supposed to be. So this one going down. Whoop. This one going down, and this one going up. That's how the game plays, Let's put Canadian now on J4X. Right there. You see, just like on Chicago Quant, marching up, up, and away with lots of green, like us. And at the same time, now we go over to the oil market and take a peek at that and say, oh, let's see, what are you doing? You can see that right there. Same game. Just pressing down, 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 and now making lows. Looks like it had, this is a spot, and the low today is 80.35. So it's very close. A lot of pressure there. All right, and then from there, what we do is we go over to, we'll do gold, and we'll go with gold, and put gold into this, like so. And there's gold. You see gold making lows because of increased interest rates. And that's what we keep on saying. We expect somewheres over the later of September or going into later October where they start to bottom out the metals complex. And that's what we keep on thinking is going to happen. And then let's put gold up on J4X right there. Oh, no, not gold. We want to put South African Rand on there. That's what it is. Right there. There's South African Rand. And so the South African Rand is rising up with this downwardly action of the gold. That's what it is right there. And then we reverse that out. We put gold in there, like so. You see gold moving down overall. And then we go over and look at South African Rand. Right there. And you can see it's going after that 18 area, I guess you could say. It's at 1784. And last time we've seen something like that was a long while ago. When is that? That's back in 2021, the last year. It didn't pierce it. Let's go over to J4X again and just double check. We're going to make it the whole page too. And go to South African Rand. And we're going to turn that into a weekly. See if we can spot when the last time it was this high up. Not in 2020, it looks like. I guess right there. That was August of 2019? Yeah. That's what that is. I think that's what that is, yeah. There's October. No, it's 2020. Okay. And there it is. And so, what is that? That is April of 2019. They took that out. So, somewhere in there they're going to start to, it'd probably be worth thinking how it'll play out is this will be a lower high and then start to roll over. And that will be, and we've been saying that, I've been saying it, if we can get into a daily buy in silver or gold even now with the way platinum's been acting, I think they're going to try to do a bounce on the upside here. Get started. Get some action going. But so far, no go. It's a no-go. And we will check that out, too, after we finish off these two. Let's see if we have anybody saying anything. Oh, there he goes. There's 47. Hey, 47. Hey, Doc. Can you take a look at the Nikkei and the S&P? Most definitely. Let's check it out. There is the Nikkei. Right there. Interesting how it's dropping down still. And, in a daily sell, right? I guess it should be over here. That's where it went into the daily sell. I think I'll just make the whole line. Make it all the way down like that. There we go. Now, what's up with the weekly? What? Is that the weekly? Yeah, I guess that is, isn't it? Yeah. So, that was last week. Something's wrong there. Let's go check this out. Instrument. Default, maybe? I'm confused. So there's the 16th, the end of the week. Where's the rest of it? How did we lose that? How come we can have this? Is that right? Right there? There's the 23rd. Why are we not? Let's see if we can do this again. Now, what is that? I'm confused what this is all about. Alright, let's do this. Did I push it up? Is that what I did? Okay, like that. Oh, I see what's going on. Okay, I think I see what's going on. So, instrument. And then That's in, what is that? That is in properties. Let's go to properties. Let's try that again. Properties. Where's properties at? Where's that? I'm confused. Something's missing here. Where's properties? All right, let's do this. Let's do the bottom one. Volume, scale. Is it on scale? No. Style. No. Settings. Where's properties? That usually controls the... Let's try this. Let me go find another chart. There's that. Okay, so then we go underneath format. And we go like that. Where's properties? Settings. Maybe that's where it is. Settings. No. Oh, yeah, there it is. Okay, it's in settings. There it is. Okay. So let's go to back to the Nick eye. Right there. So we go like this. Format instrument. That's top. Okay, good. All right. And then we go like this. Oh, I see. That's what it is. So we go like this. Double click it on there. Properties. There it is. And that is there. Okay, that's fine. And one. And then we go here. And it's 3. Properties. Inputs. What's going on here? I don't understand how we're not seeing the weekly. That's what I don't understand. Let's try this. Maybe did that do it? We're in a cell, but why are we not reflecting down below? Oh, I think I know what it is. I don't think it got switched. That's what it is. Inputs. I know what's going on. Down below is probably the September contract. That's what the problem is. Yep. That's what it is. It's a September contract. And there it is. There's the December contract. There we go. That's what did it. Okay. Matter of fact, look at that. With the December contract, it's been in the cell since there. We can get rid of those two. Remove and remove. There we go. So it's not 2 weeks it's been in the cell. It's been in a week for 4 weeks. Did the same thing as the S&Ps with that hump. You know? And that's where we're at there. Now, so there we straightened that out. I am persistent, aren't I? We are persistent here. I am not willing to let these things trick me. No tricks, please. I hate those Mises 2 pieces. All right. And so there's the yen in December. Not the yen, I'm sorry, the Nikkei. Let's go look at the S&P. There's the S&P. Yes, same situation with that crazy hump. And then the CPI goes crushing down. And that's money managers. Bazinga. Bazan. Yep, exactly. My sons like to say bazinga. Like in the Big Bang thing, you know. And then, let's see. So then from there, S&P is doing the same situation. Having issues, and we're making lows and so forth and so on. And let's see. There's the buy there. So, what else can we say? I guess there's nothing else to be said. They're pressing the stock markets down, and as much as I thought June is going to hold up, I'm starting to wonder. I mean, look at that right there. There's that low in June, and they're marching towards it. There's no doubt about that. All right, bazinga. Then I guess I'm supposed to. Oh, I know it is banzai. That's what you were saying. Banzai. Konnichiwa. Nanking. All right. From there we go to, let's see, where were we? Oh, yes, we're going to finish off We did Canadian. We did South African Rand. The yen. There's the yen. You can see the yen's trying to turn its head back up again. Right there. You see it's pressing up. But it's still underneath the minus side of it all. Let's see. So I guess this goes like that. Let's grab one of these reds. Like that. And just put it there. Where's that little thing I say that it's this, that, or the other thing? Let me see if we can find out. I'm going to give it a quick spin and then we'll widen it. There it is. Let's move that over like that. There we are. This is what's so ridiculous. Right now we have a different, host talking on the financial channel, and all they're talking about now is, will Mr. Biden run in 2 years? And that's what I'm saying is it doesn't seem to want to stop. I mean, you just can't get this to stop. It just won't stop. It drives me crazy. I really wish they would stop yakking about the politics so much. But in the end result is that's the way it goes. But yeah, I mean, I can't turn my head with that. I mean, why can't they talk about something financial? I mean, no doubt, who's running the country is financial. There's no doubt about that. But I mean, there's got to be more than that. But you can see there the yen, having its pressure at the moment. Bank of Japan holding things up. Obviously not holding up the Nikkei, that's for sure. All right, and last but not least, we go south of the border and we finish it off with the Mexican peso. Banzai. You can see here, we kept on wondering about this. This is going to be very interesting. You can see here, let's just make it big like that. You can see there, they're still flirting with the weekly sell here on Friday. But look at this. Look at that action we're getting. Let's put it up on J4X too. Right there. You can see it's trying to lift. We're getting spikies. Look at that. The spikes up, and at the same time we got the green line piercing through. And you can see over here on Chicago Quant, same gig going on. So we can widen this out like that. Dow Theory is saying something, if they pierce a certain level today, they're going to smack a doodle the market. There you go. And let's widen this out too. And there it is. So this is the Mexican peso. And we kind of thought this thing would kind of find a way to get back up in here, and now it's starting to do it again. I didn't think they were going to go challenge the bottom, but I mean, with that weekly sell trying to develop, they were starting to make me wonder if they were going to come challenge this area there. They're talking about the recession. They're saying there's real signs that there's going to be major problems. All right. So that's where it is right there. Oh, let's move that line down too. Right there. There we are. So you got the volatility signal yesterday on the Mexican peso, and boom, up it goes. All right, we're done that. So now, anybody want to see any? Oh, it says Sanders is even older than him. Who else they got? Does it really matter? They don't. I guess Newsom, California, that's one of the biggies. Newsom looks like that he'll probably be the one that runs. Newsom's probably the only one that can keep Sanders away. Sanders will run again with no problem. And age doesn't mean anything, with the Democrats. So, I mean, when you take the average Democrat in Washington, D.C. versus the average Republican in Washington, D.C., in other words, Congress and Senate, the average Democrat is some crazy, even with AOC and her young squad, the average is something like 67 or 68 years old, And then the Republicans, the average age is something like 54 or 52 or 49, something like that. It's something like a 15 or 17-year difference, the average. So, I mean, Democrats have been keeping the old ones in there a long time. So that's not abnormal there, especially on the D side. All right, from there we go over to, we're going to go back to the metals now. So let's go check out the metals. So we saw gold. Let's see what silver looks like. There was gold. It's bouncing off of its lows. That's cool. And then there's silver. Flirting with the weekly buy still. Right there. It's still flirting with that weekly buy. It's trying to hold on. But this slamming down here isn't helping it today so far. But it is trying. You know, it was through at one point. So we're going to leave that there until it breaks down. And let's go with a save there. Then, let's see, from there we go over to, we go to copper. There's the copper. Whoa, look at copper. I guess China's doing, I didn't even look to see if there's bad news on it. But this morning it was actually trying to lift up. Now it's getting crushed. Look at that. That's a real smack. A smacky doodle doo. Punch that puppy. And so, let me just go over and take a little look here. I think, you know, let's move that over. And let's see if we can take a peek and see what's going on, if there's any stories out there. Let's see. Under news, maybe something's going on in China again. They've been having every time you turn around, somebody's going bankrupt over there. You know, like their number one real estate company and their number one banking company and it just goes on and on and on. So there's a lot of issues. Let's see. Fed is finally seeing the magnitude of mess it created. That's a good one. Goldman throws in the towel, slashes S&P price target to 3,600, warns of recession crash to 3,150. I see Boeing settles with SEC for $200 million. There must be a China one out there somewhere. Futures crash, stocks at 2022 lows, yields, dollar explodes as UK stimulus plan sparks global market panic. That's no more than an hour ago. Let's see, Albert Edwards, the ice age is over, replaced by a great melt and a crushing. No, I don't see anything on China at all. Good. UK markets implode after Truss unveils historic tax cuts as economy slides into recession amid soaring prices. That's what they need to do. They need to get rid of stagflation. Contradiction. Nope, nothing there. One trader is betting on. I don't see crisis. Let's see. A financial crisis by middle of 24. Okay. Global supply crisis. No. Harvest. Switzerland molds gender neutral compulsory military service for women. Okay. Austria. Nope. I don't see anything on China. But they're smashing. Don't be surprised if we see some news on China over the next 24 hours. You know, when we come in here on Monday and we do the webinar, wouldn't surprise me if I have an article that jumps out from the places I look at, and the next thing you know is that that the China has some problem. They declared something. I understand. Let me just go further with that. I understand that because of the interest rate increases, I read 2 days ago that said that Europe, by the interest rate going up on Wednesday, they were saying that if it does, there'll be like a $15 billion margin call on European institutions. So in other words, they had to dig up $15 more billion to hold their positions. And so the bigger question is that also going on in China and we don't know about it? In other words, and that wouldn't surprise me. And it's probably global in fashion, so it's not just China. So Europe, they said that it's like a margin call. So in other words, that funds have to put in $15 billion more to hold their positions. So China probably has to do the same thing. The only problem is that Europe is a $21 trillion economy. And in my opinion, this is, China claims that they're a $14 trillion economy, and I say they're only like a $5 or $6 trillion economy. So that could be a big squeeze for a $5 or $6 trillion economy. Was it Germany is a $4 trillion economy, and England is like close to that. And in other words, when you look at these, I don't think China is any bigger economically than those countries really when it comes to stats. So because I don't think the currency is really in the sixes. Let me just see if we can. Well, no, we don't have the currency. Let's put it up on J4X. The Chinese currency trades in the sixes, I think it is. But I don't really believe it because it's a fixed currency, so it's not floating. Okay, they got it up to 7 and change now. 7.12. Okay. So, to me, I want to say that the Chinese currency probably belongs in the 13s or 14s at least. It should be double what it is now. So that could be a lot of pressure on China. And when you see copper falling the way it is this morning, and we have copper up on the chart there, you can see that with the chart with it falling like that. That really, kind of usually China usually is when copper moves, China moves, and vice versa. They marched along like we do Canadian and crude oil, and we do South African rand with gold. Well, if I'm paying attention to China, then you would basically want to look at. In other words, this has been moving up. It's been going up over the last what is that? Last month or 2 months now that they realized that they needed to do something. And so when you see that, and then you go and you look at copper over the same time period, I guess let's go back to July. So there's July, like that right there. So this has been marching down, and then it tried to flatten out. Now it's marching down again, and this has been moving up. So they kind of like march the same way, but you got to remember the Chinese yuan is not a free floating currency. It's fixed by the government every day. The government says this is what it is. This is what it is. So remember for a long while with the inflation, we showed the obvious. With all that inflation, it took them. That was when Powell. I believe that's it. Is that when Powell? Oh, here it is. So this was during the inflation. The inflation, we were concerned. Inflation started somewhere around in here. Right after the election, basically inflation started. That's why you see this stuff. But then you see the yuan flatten out, and none of the other currencies did that. They started marching, and then this is where Powell says it's not transitory anymore. When he said it wasn't transitory anymore, that's when it took off. Whereas all the other currencies, like when we take a look at the euro, let's put the euro in there. We'll do it in a dollar. Yeah, let's do the euro. So there's the euro. And the same time period, it was just gliding down. Just gliding down. And you have some flattening out in here, but nothing major because it's all gliding down. And then when you go back to the yuan, when you look at the Chinese yuan, it's like someone forgot to tell them that we had inflation. Then they took a while for them to figure that out, and then the government, it's kind of like that Bank of Japan thing we always see when you always hear and they fire somebody at the Bank of Japan, like someone goes on vacation and somebody else is put in charge to keep prices moving along. Because remember, the Bank of Japan controls 60% of the stock market. They actually outright own it, and they publish how much they own. They own 60% or 70% of all the top 50 companies. And so when someone forgets to do something when someone's on vacation, you always hear them getting fired. It's kind of fun. We always point it out. It's always fascinating. Somebody in blah 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 took over for someone taking a vacation and didn't do this, and they got fired. And then you see the adjustment on the chart. So that's what I'm talking about here. I'm talking about the fact that the interest rate increase is like a giant margin call for companies that are fund managers and so forth. So it wouldn't surprise me if we're seeing this action in in the copper. Let's put there's the copper right there. Copper's coming back down again. It looks like it's trying to go after this, and it's coming matching this one right there. So you can see the weekly is trying to press itself in. So we'll see if this starts another slide below this low right here. That was a low of 322. We're at 335 now. So now let's drift over to platinum. There's platinum, October platinum. We'll be starting to move that into the January contract very soon. And you see, we were ripping through the buy, and I was all excited. I was like, "Oh my God, yay! We're getting through the weekly buy. You're gonna, we get a daily buy in silver or gold. Jump on it, Not anymore. Look at that. It's underneath now. I even put the line in there at that point this week. I was like, "Oh boy, they're gonna really." It was up there towards the top of the manifold. So it was really running. It was running hot. It was starting to bang against the manifold, but no. All done. All done. So that's where we're at now. All right. From there, we drift over to the energy sector. And let's see. There's spot crude breaking the $80 area. And let's put Brent up there. There's Brent. Brent is $3 underneath what we saw on yesterday. It was trading at 90 and changed, like almost in between, like 90 something. Now it's trading at 87. So they're slamming that at the same time. That's stagflation. That's what that is. Because do people have enough gas and so forth and power for the winter? No. So obviously that's stagflation. That's what we're seeing there. That's not a good thing. Stagflation is definitely not a good thing. And that's why the big bankers over the last 2 days have been telling Congress, the Democrats basically, stop this stuff. And they mentioned stagflation. This generates stagflation. Now let's take a look at the back month over on Chicago Quant, the January contract right there. Same gig, in daily sells for, 7 days. And at the same time, weekly sell for a second week, and pressure is on. It's trading at 78.71. Then we go over to nat gas, and there's natural gas right there, the November contract. You can see that's pressing down, same thing. It's been in a daily sell now for 7 days, and it is flirting with the weekly as we speak right now. Look at that. So I'm going to put a little circle in there for the time being. We'll see how that goes, like that. And then we'll go from there. Let me save that too. We have a client that looks at that. There we are. So, nat gas, let's take a look at that Spanish company that trades natural gas. That's the only way we can see anything in Europe on a chart around here. Thank goodness Ducascopy has it. That's really cool. So, right there. And that's the gas and that Spanish company trading at 25.69. It's been bouncing between 26 and now in this area here. So they're pressing it down too. Love to see natural gas drop in Europe. That would be good. Help out the people for wintertime. All right. From there, we go over to the stock indices. There's the S&P 500. And obviously, down, down, down she goes where she stops. The market, and I know. All right. There it is right there. You can see S&P's down 36 points. They were as down as low as, what was that? That was 7. The low today now is 7. What was that? 30. Where's the low? 715. Let's scrunch that puppy up and find the 715. Whoa, there it is there. Ouch, ouch, and more ouch, huh? So let's see, where are we at now? This was 18 minutes after the webinar started. They made a new low right there, 715. And then you can see we went into a buy, and obviously it went up in value. We went into some sells here, And there was a buy and a head fake, and then it went down again. Actually, right there was the sell, the third one. So right there was the sell. It went down a little bit, and then we went back into a buy right there. And it was a nice win with a chicken dinner. And then when it went into a sell on the third one, 1, 2, 3. 1, 2. No, 2. Went into the sell right there without a dot even. Boom. And I caught that. And then the winner chicken dinner again is right there. It goes into a buy right there. And caught that one. Win after win after win. And that's why we say if you don't have a tool, a technical tool that shows you intraday trading and matching up with your daily or weekly or monthly trading, you got to fix it. You got to make them all work together, and that's how we do it. Matter of fact, our intraday is even hot. And you can see another buy there and another win. And a little sell there. And then another little buy and a win. Another sell there. Another buy and a win. And another sell. The sells have been wins. That was the weakest of them all. And then back in, and then that was one of the better sells. And now we're getting into the sloppiness because we're only a minute and a half away from the open. So a minute and a half and we'll see action. So let's just take a quick look at all of them, and then I'll stay on until that point. So you can see here, it's down 35, 21 points off its low. It was down 50 some odd points, 56, 7 points, something like that. The Dow Jones Industrial Average is down 289. It was down over 400, I believe, at one point. Where's the low? 29708. So it was 150 lower. So it was 450 points lower. Here is the Tech 100 right there, down 103, 105. And the low is 379, and we're trading at, basically that was 80 points lower. So it was 180 points down. And then there's Bitcoin, which started the day up, a couple hundred points, and now is not leading the equities like it normally does. And it got whacked, and it's down 325. So now let's see with, what do we got here? We have 24 seconds, and the U.S. market will open up. So this will be fun. Let's see what they're going to do with that. All right. 5, 4, 3, 2, 1. There they go. Let's see what they do. And you see they're trying to lift. Why don't we make one of them on the screen? Let's throw the Dow Jones Industrial Average. No, I'm sorry, the S&P 500. That's more interesting. You can see it's really choppy. It's in a sell. It's still trying to figure out its way. It went into the sell right there. Off the bell. And still drifting. I guess they're going to try to drift it down to this area here, and maybe it'll bottom it. So it's a nice little win-win chicken dinner live. And that's what we like to do. We like to show you if you have a technical tool and it doesn't work in an intraday basis like this, then in other words, it doesn't match to your weekly or your daily, you got to get them all matching together. Notice our dailies are always winners to a great extent. I mean, you obviously have your sloppiness and so forth, but pretty much 8.5 out of 10 times it's right. Same thing with this. The intraday, is the same way. It's very accurate. Now, went into the buy there and popped up one bar and is back in the sell. Yes, it's back in the sell again. Now it's trying to get into the buy. Let's see what happens here. Still in the sell. There you go. Now it's not yet. Almost in a buy. Now it's in a buy. Let's see where they take it to, maybe 35. Let's see. 31. It's going to go into a sell instead, maybe. I don't know. Let's see. It's trying to get into a sell. It's still in that buy. Still in the buy. 32s. 33. Nope, I don't see 33. Do I see 33? I see 31s and 32s. There's 30s. It's in the sell now. So it's not going to make it there. see how far down it goes. Makes a new low, maybe? So, like 27? It's 29. 29. 28. 29. 28. Give me a 27. We'll say hallelujah. There was 27 again. 27.75. Let's see if it does it again. Give us another 27. Come on, give us a 27 again so everybody can see it clear and loud. There it is. 27 and a half, 27 and a quarter, 26.50. There we go. Hallelujah. All right. The Reverend Doc. All right, we're done. Traders, everybody have a safe and smart weekend. We will catch you all on Monday. Monday. That'll be TGIM. Thank goodness it's Monday. We will see you all. It's now down to 24. We will see you all then. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Take care, guys. Be safe. Be smart.